You've probably heard the term trade war thrown around in the news, right? But what does it actually mean? Well, it's not about tanks or soldiers, but believe me, it can have a huge impact on your wallet and the entire global economy. So today, we're going to break down what happens when countries decide to go to battle using tariffs.
So let's just dive right in with the big question. What really happens when the fight is with taxes instead of tanks? This is the battlefield we're going to explore. And the weapons, well, they're economic policies that affect pretty much all of us.
All right, first things first. What exactly is a trade war? Before we get into all the drama and the consequences, we got to define the battlefield and get a handle on the basic ideas.
At its heart, a trade war is basically a tit-for-tat cycle. It gets going when one country slaps a special tax, that's called a tariff, on goods coming in from another country. The whole point is to make those imported things more expensive. But, as you can imagine, the other country almost never just sits back and takes it. They hit back with their own tariffs, and just like that, the battle is on. Now, this whole strategy is driven by an idea called protectionism. And it's exactly what it sounds like. It's all about shielding your country's own businesses and jobs from foreign competition. Tariffs are one of the main tools in the protectionist toolbox, and a trade war is what happens when both sides start using those tools aggressively.
So why would any country do this? Well, that brings us to what you could call the protectionist playbook. It's a strategy that has some really powerful arguments in its favor, but also some pretty significant and often costly downsides. And this is where the debate gets really heated. On the pro side, proponents will tell you that these policies protect local companies and jobs from being undercut. They see it as a way to boost their own industries, maybe even punish another country for what they see as unfair practices. But the con side is just as strong. Critics fire back that messing with trade just means higher prices and fewer choices for all of us. It can lead to shortages, sour international relations, and actually drag down economic growth for everybody involved.
Okay, so that's the theory. But what does a trade war actually look like in the real world? Honestly, there's no better or bigger modern example than the economic slugfest between the world's two largest economies, the US and China.
It all really kicked off in 2018. The US imposed tariffs, and China almost instantly retaliated. It was like a game of economic ping pong. And look how fast things escalated. By May of 2019, some tariffs were jacked way up. There was a little bit of a ceasefire with a deal in early 2020, but the fight was far from over. It flared right back up in 2024 with new targeted tariffs, which just goes to show how long these things can simmer. And to really get a sense of the scale we're talking about here, that 2019 escalation alone targeted $200 billion worth of Chinese goods. Yeah, that's billion with a B. This wasn't some tiny surgical strike, it was a massive economic move, hitting a huge range of products.
And then, bam! In 2024, the strategy got even more pointed. The tariff on Chinese electric vehicles was cranked all the way up to 100%. A tax that high? Well, it isn't really about collecting money. It's basically a giant wall designed to block a product from the market completely.
And just as you'd expect in a trade war, the cycle continued. As soon as those 2024 tariffs were announced, China vowed to hit back. It just hammers home the key point here. This isn't a single event. It's an ongoing back and forth, where every single action triggers a reaction.
Okay, so this all leads us to the most important question at the heart of any trade war. You've got hundreds of billions of dollars in taxes flying around, but who actually ends up paying the bill?
It's really easy to think that the country getting taxed is the one footing the bill. But in our super-connected global economy, the reality is a whole lot more complicated.
So who pays? Well, the International Monetary Fund looked into this, and they came back with a crystal clear answer. The cost of the tariffs on Chinese goods was not primarily paid by China. Nope, it was shouldered almost entirely by U.S. importers.
And here's how that cost just trickles right down the line. First, the government imposes the tariff. That means the American company trying to import that product now has to pay more to get it. So what do? To protect their profits, they raise their prices. And guess who's at the very end of that chain? The consumer. That's right, you.
And the ripple effects, they just keep spreading out from there. For us as consumers, it doesn't just mean higher prices, it can also mean fewer choices on the shelves, and maybe even shortages of some things. For businesses, especially a manufacturer who needs imported parts, their costs go up, which makes it harder for them to compete. And when you multiply all this across an entire economy, it can fuel inflation and really put the brakes on economic growth.
So what's the big takeaway here? It seems that even though the stated goal is to protect your own country, The evidence shows that trade wars tend to be mutually damaging. There aren't really any clean victories. In the end, the costs just get paid by regular consumers and businesses in both of the nations involved.
And all of this leaves us with one fundamental question to chew on. In today's incredibly connected global economy, where a single smartphone can have parts from a dozen different countries, can anyone actually win a trade war? Or does everybody just end up paying the price? Thanks for tuning into this explainer.